There's a video circulating right now that's scaring millions of Social Security recipients. It claims a brand new rule takes effect January 1st that could delay your check if you make one small mistake. It's getting thousands of views. And nearly everything in it is false. I'm going to walk you through what's actually happening with Social Security, what's real, what's not, and why this kind of misinformation is dangerous. Because when people panic about their benefits, they make rushed decisions. They call Social Security offices already overwhelmed with legitimate cases. And worst of all, they lose trust in a system they've paid into their entire working lives. Let me be clear from the start. If you're interested in this topic, hit the like button, subscribe, and type "interested" in the comments. And I will give you a heart. I've spent years analyzing Social Security policy. I read the actual Federal Register notices. I track SSA announcements. I understand how the system works. And I'm telling you right now, there is no sweeping new verification rule taking effect on January 1st, 2026. But there are real things you should know. Real policies. Real best practices. And by the end of this video, you'll understand exactly what's true, what's always been true, and what you actually need to do to protect your benefits. The misinformation problem. Here's what's happening. Content creators are taking standard Social Security procedures that have existed for years, packaging them as urgent new changes, and presenting them with alarm language designed to get clicks and views. They'll say things like, one small mistake could freeze your payment, or millions of seniors need to act before December 31st. It works because Social Security is complicated. The rules are dense. Most people don't read Federal Register updates or SSA policy manuals. So when someone presents information with authority and urgency, it sounds credible. Even when it's not. The video I'm referencing claims the SSA is implementing something called an updated direct deposit security procedure that will flag mismatches and automatically hold payments. It suggests that everything from a middle initial to a nickname could trigger a freeze. It warns that paper checks are being phased out immediately. It describes a new electronic benefit transfer compliance policy and an identity integrity initiative. These terms sound official. They sound like real programs. But when you actually search for them on SSA.gov, when you check the Federal Register, when you look at official SSA announcements, they don't exist as described. What does exist? Standard operating procedures that have been in place for years. Let me break down what's real. What's actually true about Social Security? The Social Security Administration does require accurate information. This isn't new for 2026. It's been true since direct deposit became available decades ago. Your bank account information needs to match your identity. Your address needs to be current. If you have a representative payee managing your benefits, they do need to submit annual reports. These are long-standing requirements, not sudden changes. Here's what actually happens when information doesn't match. If your bank rejects a direct deposit because the account is closed or the name doesn't match, the payment is returned to Treasury. The SSA is then notified. They will attempt to contact you using the most recent information on file. Your payment isn't lost. It's held until the issue is resolved. This has always been the process. If mail is returned as undeliverable, yes, the SSA will flag your account. They need to know where to send correspondence, including important notices about your benefits. Again, this isn't new. It's how the postal system and government agencies have always worked together. The SSA does encourage direct deposit. They have for years. It's more secure than paper checks, it's faster, and it reduces the risk of theft or loss. But paper checks are not being eliminated on January 1, 2026. The agency has been gradually moving toward electronic payments, but this is a multi-year transition, not a sudden cutoff. Representative payees do submit annual accounting forms. This requirement has existed for decades. It's how the SSA ensures that beneficiaries who cannot manage their own funds are being properly cared for. The forms are called SSA 623 or SSA 6230. The due dates are staggered throughout the year based on when the payee relationship was established. The real January 1st changes. So what actually is changing on January 1st, 2026? Let me tell you what's real and documented. The 2026 Cost of Living Adjustment, or COLA, takes effect. For 2026, the COLA is 2.5%. This means benefit amounts increase by 2.5% to account for inflation. This is an annual adjustment, not a new verification rule. The maximum taxable earnings limit increases. For 2026, earnings up to $176,100 are subject to Social Security tax. This affects people still working, not retirees receiving benefits. The earnings test limits change. If you're receiving benefits before full retirement age and still working, there are limits to how much you can earn before benefits are reduced. These thresholds adjust annually. For 2026, if you won't reach full retirement age during the year, you can earn up to $23,400 before benefits are reduced. In the year you reach full retirement age, the limit is $62,160 for the months before you reach that age. Medicare Part B premiums adjust. For 2026, the standard Part B premium is $185 per month. If you have your Part B premium deducted from your Social Security check, you'll see this reflected in your January payment. Those are the real changes. They're routine annual adjustments. They happen every year. They're announced months in advance on SSA.gov. Why misinformation spreads? Let me explain why false information about Social Security spreads so easily. First, the system is genuinely complex. There are different benefit types: retirement, disability, survivor, SSI. Each has different rules. Add in Medicare coordination, tax implications, and state-level programs, and it's easy to get confused. Second, people care deeply about their benefits. For many retirees, Social Security is their primary or only income source. Any suggestion that payments might be delayed or stopped triggers immediate concern. It's personal. It's urgent. So content that plays on these fears gets attention. Third, the SSA's own communication can be difficult to navigate. Their website contains accurate information, but it's dense. Policy manuals run hundreds of pages. The average person doesn't have time to read through POMS sections or Federal Register notices. This creates an opening for content creators who position themselves as translators or interpreters. They claim to simplify complex information. Sometimes they do this accurately. Often they don't. The video I'm addressing uses several tactics common to misinformation. It creates urgency with deadlines. Before January 1st, or before December 31st, implies that immediate action is required. IT uses official-sounding terminology. Terms like direct deposit security procedure and payment integrity modernization program sound like real SSA initiatives. IT presents routine procedures as new changes. Requirements that have existed for years are framed as sudden policy shifts. IT emphasizes consequences. Phrases like could delay your check or automatically freeze your payment heighten anxiety. IT provides a mix of true and false information. By including some accurate details, like the existence of representative payees or the preference for direct deposit, it gains credibility for the false claims. What you actually need to verify. Now that we've addressed what's false, let's talk about what you should actually check. Not because of a new January 1st rule, but because keeping your information current is always good practice. Your direct deposit information should be accurate. If you've changed banks in the past year, make sure the SSA has your current account number and routing number. If your bank merged with another institution and account numbers changed, update that information. How do you check? Log into your My Social Security account at SSA.gov. Under the Replace Your Direct Deposit Information section, you can view and update your banking details. You can also call the SSA at 1-800-772-1213 or visit your local office. Your mailing address should be current. The SSA sends important notices by mail. These include annual benefit statements, COLA notices, and tax forms. If you've moved and haven't updated your address, do it now. Not because of a January deadline, but because you need to receive these documents. You can update your address through your My Social Security account, by phone, or by visiting an office. If you spend part of the year at different addresses, you can request that mail be held or forwarded, but the SSA should have your primary permanent address on file. Your contact information should be up to date. If you've changed your phone number or email address, update these with the SSA. They use this information for identity verification when you call or access your account online. If you have a representative payee, make sure they're submitting the required annual reports. These are due on specific dates based on when the payee relationship began. The SSA sends the forms automatically. The payee completes them and returns them. If you're a representative payee and you haven't received your form, contact the SSA. Don't wait. My Social Security accounts. Let's talk about My Social Security accounts because this is something the misinformation video mentions, and there is legitimate value here. A My Social Security account is a free online account that lets you access your Social Security information securely. You can view your earnings history, get benefit estimates, check your payment information, and update certain details like direct deposit and address. If you don't have an account yet, you should create one. Not because of a January deadline but because it's useful and it helps protect against fraud. If someone tries to create an account in your name to access your information, they can't if you've already created one. Creating an account requires identity verification. You'll need to provide personal information and answer questions based on your credit history. If you can't complete the online verification, you can verify your identity at a Social Security office and then activate your account. The SSA did update its login system in recent years. They now use login.gov, which is a centralized government login service. If you created your My Social Security account years ago, you might need to transition to login.gov. This isn't a January 2026 change. It's been rolling out for the past couple of years. When you log in, check that your information is correct. Look at your direct deposit details. Verify your address. Make sure your phone number and email are current. If anything needs updating, do it through the account or by contacting the SSA. Direct deposit and payment methods. The Misinformation video spends significant time discussing direct deposit requirements and payment freezes. Let's clarify what's actually true. The SSA strongly encourages direct deposit. According to federal law, with few exceptions, federal benefit payments must be made electronically. This has been the case since 2013, not 2026. The law is called the Go Direct Initiative, later codified in federal regulations. If you currently receive paper checks, you can continue to do so if you qualify for a waiver. Waivers are granted to people who don't have a bank account and face hardship in opening one, or those who live in remote areas without access to banking services. But the SSA isn't suddenly eliminating paper checks on January 1st. The transition to electronic payments has been ongoing for over a decade. If you receive paper checks now and haven't been told to switch, you can continue. However, direct deposit is genuinely safer. Paper checks can be lost, stolen, or delayed in the mail. Direct deposit puts your money in your account on your payment date. No waiting for mail. No trips to the bank. If you don't have a bank account, you have options. The Direct Express card is a prepaid debit card specifically for federal benefits. Your Social Security payment is loaded onto the card each month. You can use it like a regular debit card or withdraw cash at ATMs. There are no monthly fees if you use it according to the terms. The claim in the Misinformation video that inactive Direct Express cards will be automatically deactivated is misleading. Cards can be closed for extended inactivity, but this isn't new for 2026. If you use your card regularly, even just to check the balance, it remains active. Regarding bank account verification, here's what actually happens. When you set up or change direct deposit, the SSA verifies that the account exists and that it can accept deposits. They do this by making a small test deposit or by checking with the bank. This prevents payments from going to closed or invalid accounts. If your name on the bank account doesn't exactly match your name in SSA records, it can cause issues. But this has always been true. Banks match names when processing deposits. If your Social Security check is made out to Mary Elizabeth Johnson, but your bank account is under Mary E. Johnson, the deposit might be rejected. The solution isn't to panic. It's to ensure consistency. If you've legally changed your name due to marriage, divorce, or for any other reason, update it with both the SSA and your bank. If you use a different version of your name, like a middle name versus an initial, make sure SSA and your bank have the same version. Joint accounts are allowed. If you have a joint checking account with your spouse, your Social Security payment can be deposited there. The SSA doesn't require that you be the sole account holder. But your name does need to be on the account. Representative payees. The Misinformation video discusses representative payees and implies new requirements are taking effect. Let me clarify what's actually true. A representative payee is someone appointed by the SSA to manage benefits on behalf of a beneficiary who cannot manage their own funds. This might be due to age, mental or physical disability, or other circumstances. Representative payees have always been required to report how they use the benefits. The annual accounting form asks questions about where the money went. Did it pay for housing, food, medical care, clothing, personal needs? This requirement isn't new for 2026. It's been in place for decades. The SSA staggers the due dates throughout the year. Your specific due date depends on when the payee relationship was established. If you're a representative payee and you don't submit the form on time, yes, payments can be suspended. But this has always been the case. The forms are called SSA 623 for most beneficiaries and SSA 6230 for beneficiaries under age 18. The SSA mails them to the payee's address. You can also complete them online through the payee's own portal on ssa.gov. If you're a beneficiary who has a representative payee, you have rights. You can request to change payees if you're unhappy with how your funds are being managed. If you believe you no longer need a payee, you can request a capability review. The SSA will evaluate whether you can manage your own benefits. If you're a representative payee, understand your responsibilities. You must use the funds for the beneficiary's current needs. You must keep records. You must report changes in circumstances like if the beneficiary moves, gets married, or passes away. The claim that payees now need to submit forms electronically is false. You can submit the paper form by mail, or you can use the online system. It's your choice. Income reporting for SSI and SSDI. The misinformation video mentions that disability beneficiaries need to report income and that the system will cross-check with IRS records starting in January. Let's separate fact from fiction. If you receive supplemental security income or SSI, you are required to report changes in income and resources. This is because SSI is a needs-based program. Your benefit amount depends on your income and assets. If your circumstances change, you must report it, usually within 10 days. Changes you must report include starting or stopping work, changes in wages, changes in living arrangements, and changes in household composition. This requirement has always existed. It's not new for 2026. If you receive Social Security Disability Insurance or SSDI, the rules are different. SSDI is based on your work history, not financial need. However, if you return to work while receiving SSDI, you must report it. There are work incentives and trial work periods that allow you to test your ability to work without immediately losing benefits. The SSA does verify income information. They have access to wage records from employers and tax information from the IRS. If there's a discrepancy between what you've reported and what their records show, they will investigate. This isn't new. It's standard fraud prevention. If you work while receiving disability benefits and you've reported it properly, you have nothing to worry about. The issue arises when people work and don't report it, either because they don't understand the rules or because they're deliberately trying to hide income. If you're unsure whether you need to report something, report it. It's better to over-communicate with the SSA than to under-report and face an overpayment or fraud investigation later. Protecting yourself from actual fraud. While we're addressing misinformation about Social Security rules, let's talk about real threats. Because fraud targeting Social Security beneficiaries is a genuine problem. Scammers impersonate SSA employees. They call claiming your Social Security number has been suspended due to suspicious activity. They say you need to verify your information or make a payment to fix the problem. This is always a scam. The SSA will never call you demanding immediate payment or threatening arrest. Real SSA employees might call you if you've recently contacted them or if there's an ongoing case. But they will never ask for payment by gift card, wire transfer, or cryptocurrency. They won't threaten you. They won't demand your Social Security number over the phone if they initiated the call. If you receive a suspicious call, hang up. Then call the SSA's main number at 1-800-772-1213 to verify whether there's actually an issue with your account. Don't use any number the caller gave you. Look up the official number yourself. Phishing emails are another threat. You might receive emails claiming to be from the SSA with links to update your information or verify your account. The SSA does send emails, but they will never ask you to click a link to provide personal information. If you need to access your account, type ssa.gov directly into your browser. Identity theft can result in someone filing for benefits in your name. This is why creating your own My Social Security account is protective. If an account already exists in your name, a scammer can't create one. Monitor your Social Security statement annually. Check that your reported earnings are correct. If you see wages you didn't earn, it could indicate someone is using your Social Security number for employment. Report this immediately. The SSA has an Office of the Inspector General dedicated to investigating fraud. You can report suspected Social Security fraud online at oig.ssa.gov or by calling 1-800-269-0271. What to do if your payment is actually delayed? Despite what the misinformation video claims, payment delays are relatively rare if your information is current. But they can happen. Here's what to do if your payment doesn't arrive when expected. First, know your payment schedule. Social Security payments are made on a schedule based on your birth date and when you became entitled to benefits. If you received benefits before May 1997, you typically get paid on the 3rd of each month. If you became entitled after May 1997, your payment is made on the 2nd, 3rd, or 4th Wednesday of the month. Second Wednesday is for birthdays on the 1st through 10th of the month. Third Wednesday is for birthdays on the 11th through 20th. Fourth Wednesday is for birthdays on the 21st through 31st. SSI payments are made on the 1st of each month. If your payment date arrives and the money isn't in your account, wait one additional business day. Sometimes there are processing delays, especially around holidays. If the payment still hasn't arrived, check your My Social Security account to see if the payment was issued. Look under View Payment History. If it shows the payment was sent, contact your bank. There might be an issue on their end. If your account shows no payment was issued, or if there's a hold on your account, contact the SSA. Call 1-800-772-1213. Be prepared for wait times, especially early in the month when call volume is highest. You can also visit your local Social Security office, though I recommend calling first to see if the issue can be resolved by phone. When you call, have your Social Security number ready, along with information about your last successful payment. The representative can look up your account and tell you why the payment was delayed. Common reasons for delayed payments include return direct deposits due to closed accounts, address verification issues if mail was returned, or pending reviews related to eligibility or income. None of these are triggered by a new January 1st rule. They're long-standing reasons that have always existed. If the delay is due to a verification issue, ask what documentation you need to provide. The SSA will tell you exactly what they need. Provide it as quickly as possible. Once they receive and process the documentation, your payment will be released. Delayed payments are not lost payments. If your payment is held due to a verification issue and you resolve that issue, you'll receive the back payment. Social Security doesn't just keep your money. You're entitled to what you've earned. Changes you should report to the SSA. Let me give you a comprehensive list of changes you should report to the Social Security Administration. These are ongoing responsibilities, not new requirements for 2026. Report if you move. Your address needs to be current so you receive important notices. Report even if you're moving temporarily or seasonally. Report if you change your bank account. If you switch banks, close an account, or want to change where your direct deposit goes, update this immediately. Don't wait until the next payment is due. Report changes in marital status. If you get married, divorced, or your spouse passes away, this can affect your benefits. Survivor benefits and spousal benefits have specific rules. Report if you leave the country. If you're a U.S. citizen, you can generally receive benefits while living abroad, but there are some countries where payments can't be sent. If you're not a citizen, leaving the country can affect eligibility. Report travel plans, especially extended stays abroad. Report if you have a beneficiary who passes away. If you're receiving benefits on behalf of someone else, or if you're a representative payee, you must report the beneficiary's death immediately. Continuing to collect benefits after someone has passed is fraud. Report changes in disability status. If you receive disability benefits and your medical condition improves, or if you return to work, report it. The SSA has work incentive programs that can help you transition back to employment without immediately losing benefits. Report changes in custody or care. If you receive benefits for a child and custody changes, or if someone receiving benefits enters or leaves an institution, this must be reported. For SSI recipients, report all changes in income, resources, living arrangements, and household composition. SSI has strict reporting requirements because it's needs-based. Most changes can be reported through your My Social Security account, by phone, or by visiting an office. Don't assume the SSA knows about changes automatically. Even if another government agency knows, like if you updated your address with the post office, you still need to update it with Social Security. Understanding SSA communications. The SSA communicates with beneficiaries in specific ways. Understanding how they reach out can help you identify real communications versus scams. Official letters come by U.S. mail. They're on SSA letterhead and include specific information about your claim. They'll have a return address and often a case number or reference number. If you receive a letter about your benefits, read it carefully. It will tell you if any action is required and by when. The SSA does send some emails, but only if you've opted in to receive electronic communications through your My Social Security account. These emails will generally direct you to log into your account to view a message. They won't ask you to provide personal information in the email itself. The SSA very rarely initiates phone calls, and when they do, it's usually in response to a recent inquiry you made or in relation to an ongoing case. They will never call demanding immediate payment or threatening legal action. If you need to contact the SSA, use the national number 1-800-772-1213. They're available Monday through Friday, 8 a.m. to 7 p.m. local time. Wait times vary, with early morning and mid-month typically being less busy. You can also visit your local Social Security office. You can find the nearest office using the office locator on ssa.gov. Some services require an appointment, while others are available on a walk-in basis. Calling ahead can save you time. The SSA website, ssa.gov, is the authoritative source for information about your benefits. If you read something about Social Security on another website or social media, verify it on ssa.gov before acting on it. The actual 2026 COLA and payment amounts. Since we're discussing what's changing in 2026, let me give you the concrete numbers for the cost of living adjustment. The 2026 COLA is 2.5%. This is lower than recent years. For comparison, 2023 had an 8.7% COLA, and 2024 had a 3.2% COLA. The 2.5% reflects lower inflation rates. For someone receiving the average retirement benefit of about $1,976 per month in 2025, the 2.5% increase means about $49 more per month, or roughly $588 more over the course of the year. The maximum Social Security benefit for someone retiring at full retirement age in 2026 is $4,018 per month. This is up from $3,822 in 2025. The maximum SSI federal benefit rate for an individual is $967 per month in 2026, up from $943 in 2025. For a couple, it's $1,450, up from $1,415. These increases are designed to help benefits keep pace with inflation. Your specific increase depends on your current benefit amount. The COLA applies to all types of Social Security benefits, including retirement, disability, and survivor benefits. Your January 2026 payment will reflect the new amount. If you have Medicare Part B premiums deducted from your Social Security check, the increase in premium will be taken out before you see the net benefit. For 2026, the standard Medicare Part B premium is $185 per month, up from $174.70 in 2025. If you're subject to the higher income Medicare premium surcharge, known as IRMAA, your premium will be higher. The COLA notice was mailed to beneficiaries in December 2025. If you have a My Social Security account, you can also view your new benefit amount online. How to verify Social Security information. Before we close, I want to give you a framework for evaluating Social Security information you encounter online. First, check the source. Is it coming from ssa.gov? That's the official source. Information on the Social Security Administration's website is authoritative. Everything else should be verified against what ssa.gov says. Second, look for specifics. Real policy changes come with specific citations. They reference Federal Register notices, Program Operations Manual sections, or public laws. Vague claims about new rules without documentation should raise red flags. Third, check the date. Social Security policy does change, but major changes are announced well in advance. If someone claims a massive new rule is taking effect in a few weeks and you've heard nothing about it from official sources, be skeptical. Fourth, assess the tone. Legitimate Social Security information is straightforward. It explains what's changing and what you need to do. Misinformation often uses alarm language, urgency tactics, and fear. If something makes you panic, take a step back and verify before acting. Fifth, cross-reference. If you hear about a policy change, search for it on ssa.gov. Check multiple sources. See if reputable news organizations are covering it. Major Social Security changes are reported by mainstream media. You can also consult with a legitimate benefits counselor. Organizations like your local area agency on aging, SHIP counselors who help with Medicare, or legal aid programs can provide guidance. Be cautious of anyone charging high fees to help you with Social Security issues. Many legitimate resources are free. The real action items. Let me summarize what you actually should do. Not because of a false January 1st deadline, but because these are good practices. Review your My Social Security account. Make sure your information is current. Check your direct deposit details, your address, and your contact information. If you don't have an account, create one. If you've moved recently, update your address. Do this through your My Social Security account, by calling 1-800-772-1213, or by visiting an office. If you've changed banks or account numbers, update your direct deposit information. You can do this online or by completing Form SF 1199A and submitting it to your bank or the SSA. If you're a representative payee, Make sure you submit your annual accounting form on time. Watch for it in the mail or access it through the representative payee portal online. If you receive disability benefits and your circumstances have changed, report it. This includes changes in medical condition, work activity, or income. Monitor your benefit statements. Check that your payment amount is correct and that Medicare premiums, if applicable, are being deducted properly. Watch out for scams. Don't respond to suspicious calls, emails, or text messages claiming to be from the SSA. If in doubt, contact the SSA directly using official channels. That's it. No panic. No rushing. No January 1st emergency. Just basic account maintenance that you should be doing anyway. Why this matters. Misinformation about Social Security doesn't just cause confusion. It has real consequences. It floods SSA offices and phone lines with unnecessary calls. People who actually need help have to wait longer because the system is overwhelmed with people calling about non-existent rule changes. It erodes trust. When people are repeatedly told the system is changing in ways that never materialize, they stop believing accurate information. They become cynical about real policy changes when they do occur. It creates anxiety. Many Social Security recipients are elderly or living with disabilities. They're on fixed incomes. The thought that their benefits might be delayed or stopped is genuinely frightening. Causing that fear unnecessarily is harmful. It distracts from real issues. There are legitimate challenges with Social Security. The trust funds face long-term solvency questions. Customer service at SSA offices has been strained due to budget and staffing issues. Administrative backlogs exist. These are the conversations we should be having, not debunking false claims about verification rules. As content creators and information consumers, we have a responsibility. If you're making videos about Social Security, base them on documented facts. If you're watching videos about Social Security, verify what you hear against official sources. Resources you can trust. Let me leave you with a list of reliable resources for Social Security information. SSA.gov is the official Social Security Administration website. This is your primary source for accurate, up-to-date information about benefits, eligibility, and policy changes. The Social Security Administration's Office of the Inspector General, OIG.SSA.gov, provides information about fraud prevention and how to report suspected fraud. Medicare.gov is the official Medicare website. Since many Social Security beneficiaries also have Medicare, this is an important companion resource. The National Academy of Social Insurance, NACI.org, provides research and education about Social Security policy. They publish fact sheets and reports based on actual data. AARP has resources about Social Security and retirement planning. While AARP is an advocacy organization, their fact sheets on Social Security are generally accurate. Your local area agency on aging can provide information about Social Security and other benefits for seniors. Find yours through the ElderCare locator at eldercare.acl.gov. State Health Insurance Assistance Programs, or SHIP, offer free Medicare counseling. They can help you understand how Medicare coordinates with Social Security. Legal services organizations, including legal aid programs, can provide assistance if you're having problems with your benefits. Find legal help through lawhelp.org. These resources provide information based on actual law and policy, not speculation or fearmongering. Social Security is complicated enough without adding false information to the mix. You've paid into this system your entire working life. You're entitled to accurate information about your benefits. There is no new verification rule taking effect January 1st that will freeze payments for small mistakes. There is no sudden elimination of paper checks. There is no emergency deadline to update your account. What there is, a 2.5% cost of living adjustment taking effect in January. Routine requirements to keep your information current. Standard procedures that have existed for years. And an ongoing need to protect yourself from actual fraud, not fictional policy changes. Keep your account information accurate. Monitor your benefits. Watch out for scams. And verify information before believing or sharing it. The SSA isn't trying to take your benefits away. They're not setting traps for beneficiaries who make small mistakes. They're administering a program that serves over 70 million Americans. Yes, there are bureaucratic frustrations. Yes, the system can be slow. But it's not out to get you. Stay informed. Use official sources. And don't let fear-based content make you panic about benefits you've rightfully earned. If this video helped you understand what's real and what's not, share it with someone who might have seen the misinformation. Let's counter false claims with actual facts. Drop a comment if you've seen other misleading Social Security content. Let me know what questions you still have. I read every comment and I'll create follow-up content based on what people actually need to know. And if you want more straightforward Social Security information without the fear tactics, subscribe. I'll keep cutting through the noise and giving you what's real. Your benefits matter. The truth matters more.